Hello and welcome. My name's Chris Can with Mining Journal, and with me I have Rule Investment Media Chief Executive Rick Rule. Rick signed on with Aspermont in partnership across a series of finance events, including the Rule Symposium and the Mining Journal and Mining News Select events. He'll be with us at those events throughout the year, but we have got a little bit of a curtain raiser through this virtual series of events. And today we're going to ask Rick about policy directed at climate change and obviously supply chain security. Welcome, Rick.
Chris, it's a pleasure. Pardon me. It's a pleasure to be with you. Thank you.
We're coming up to almost 2 years since the Inflation Reduction Act was signed. In your view, has it had the impact that many were expecting, and probably more relevantly that you were expecting? And how do you see it shifting in the years ahead?
The Inflation Reduction Act was really a disgusting bill. It was nothing about reducing inflation. It was all about rewarding people who were good campaign donors on both sides of the aisle. It was interesting to me personally, seeing the treatment of the uranium industry in the Inflation Reduction Act. We went in 4 years from being pariahs to being in need of a $5.2 billion subsidy. While I feel dirty in the way of that money, I guess I would prefer for them to be subsidizing me than vilifying me. It's interesting, too, that although the market has seen the problems around the supply chain and geopolitics for 10 years or 15 years, it took Congress until 2 years ago. My wish would be that the American administration and the senior bureaucrats, as well as the Eurozone bureaucrats, came to your conference, because the solution to the supply chain will be among the exhibitors at your conference. It isn't something that will be found in Brussels. It isn't something that will be found in Washington. It isn't something, for that matter, that will be found in Canberra. It will be among the companies that are going out looking for and developing supplies of critical materials, rather in the East or in the West. It will be companies and individuals that solve the problem for humankind, just as they have for a very long time. The policy will be a sideshow. Yes, it's probably better from the industry's point of view to be subsidized than vilified. But the truth is that we need to remember that supply occurs through exploration, that distribution occurs through investment. We need to keep our eye on government policy because it can be very dangerous to us as investors. But we need to take responsibility as investors for delivering the materials to our species that allows for our own mutual economic advancement.
I think something that the industry certainly was hoping for from such policy was an understanding of what is involved in the supply chain. And as you say, starting with exploration, but then permitting actual developments. From our stables, we haven't really seen any indication that that's happening. Can you see a shift in the conversation away from just those, as you say, Brussels and Washington-centric posturing and rhetoric, and towards some actual practical changes to allow some of the projects that are needed to actually be permitted?
I think that you're going to be seeing some local changes. I'm hoping you're going to see some local changes in permitting. A consistently pro-mining jurisdiction like Western Australia isn't a place where intelligent local permitting should be problematic, but it's become problematic. I look in my own country, the Resolution copper deposit, well over 1 billion tons of fairly high-grade copper, 1.5%, 3 times the average world grade, has been stuck in permitting for 28 years. My hope is that as local opposition, local NIMBY opposition to permitting recedes, that at the federal level and at the global level, our understanding of our need for these materials will allow us to smooth over some aspects of permitting. There are other places, particularly in energy policy, where the outlook still is very, very bad. The big thinkers of the world, be they in Australia or in the United States, have this continued belief that alternative energy is somehow going to save them from carbon. To that end, Chris, they've spent well over $5 trillion US dollars, reducing the market share of fossil fuels from 82% all the way down to 81%. At some point in time, we voters need to introduce the policymakers to a couple of subjects that they didn't do well at school. One would be math, simple arithmetic, and the other might be energy physics. So while I do see the permitting regime and some of the fiscal regimes around extractive industries in the West getting a little bit better, I still see resource nationalism around the world. And I still see a basic misunderstanding of materials, of energy at the government level and probably at the voters level on a global basis. And it'll be our job as humans to address that in the next 10 or 15 years. We need to speak back.
Okay. You mentioned the inappropriateness of the Inflation Reduction Act, and I must admit I don't really understand where it ever got its name from myself. It is about supply chain security, and you see a similar type of thing with the Critical Raw Materials Act over in the EU. What do you see as a response coming out of most notably China at the moment to some of these supply chain issues, which are targeting China? And anywhere else that you see as relevant to resources markets?
What the Chinese are doing in terms of Chinese outbound investment is the same thing the United States and Europe did in the 50s and 60s, and the same thing that the Japanese did in the 70s. They're securing their access to the raw materials that they need. I think, have responded to American counterpressure. The weaponization is an example of the U.S. dollar and the attempts by the U.S. State Department to constrict Chinese access to raw materials by fighting back, constricting Western efforts to things like rare earths. The games that politicians play. My hope would be that people who have a surplus of one material and who are more efficient producers produce it and sell it to those who are willing to pay for it. That doesn't seem to be the way the world is going to work. The world seems to be falling back into the same type of self-interested blocks that existed in the 60s and the 70s and the 80s. My hope would have been a more multipolar world where people traded to their mutual benefit. It would appear that the next decade or two isn't going to see that sort of outcome. It would appear that there's an ascendant Chinese bloc, that there is a Eurozone that is perhaps more progressive, if that's the right phrase, than the United States. It would seem that our multipolar world is going to be less friendly and a little more hostile to each other, which is just going to make things less pleasant and more expensive for all of us. But we'll get through this. We always do. The truth is that in all materials, what you learn is that the cure for low prices is low prices, and the cure for high prices is high prices. If the Chinese decide to raise the price of rare earths really substantially, what'll happen is that we'll find ways to use less, and we'll go out and find ways to find more. The cure for high prices in the event of a Chinese blockade will, in fact, be lower prices. That's the way it's going to work. We need to understand that, and I wish the politicians would come to understand it.
Rick, that's all we've got time for this interview. We look forward to catching up with you properly across our event series and your own, obviously, in Miami, London, Perth, and Sydney.
Chris, I've been a beneficiary of the Mining Journal for many, many years, and I look forward to visiting with your audience in all of those cities.